Hey, what's up, my beautiful people? It's your boy Devo, some motivational, back with another day trading spy recap. And real quick, I want to say thank you all for all the likes, the comments, the subscribes. Thank you guys for everything y'all do for me. Literally, really, thank you guys for everything. Yeah, like literally, thank you guys for everything. We're up to 58 subs now. I remember just like last week we were talking about how we were struggling to get to 50, and now we're up there to almost 60 subscribers. To a lot, it may seem like little, but I mean, as a growing channel and as y'all are following me through the journey, I mean, it really means a lot to me. So again, I just like to always say thank you all for the comments, the likes, the subscribes, the views, okay? And I hope I provide valuable information every day I show up, because that's literally my goal, to show you guys where I mess up during my trades, how I win trades, what I'm looking for during my trades, how I'm getting better through my trades, what info I'm learning from the market. I like to give you guys the data on what moves the market, and I just like to give you guys good information on the market, okay? And so I hope I do provide that for you guys, okay? And so today we have an actual very good one. We haven't had a trade yet, but it is only 11:20, and that is pretty late in the trading day. But we have a lot of big news that could potentially move this market way lower than what it is, and I'm gonna go over it all. And so I'm gonna keep my eyes on the charts even through 12, 1 o'clock, because we could potentially see dumps. But I'm gonna go into that, and we're gonna go over the data that we have today and everything that's going on, okay? And so let's get straight into it, okay? So first, let's start off with the data that we have today. We don't have much data. I told you guys this yesterday. We didn't have much data. We have home sales month on month, as we could see, forecasted, consensus. We have actual better home sales than forecasted and consensus. Month on month, it was forecasted negative, and it's 10.9%. So we have some good data. We've been having some pretty good data coming out. New home sales higher than expected. And then at 12 p.m. we're gonna have Baker Hughes. I don't know. I don't really know who this is, honestly, but I don't think that's very important. And then we have Fed Cook speech. Yeah, we have Fed Cook speech around, I believe it said 1, I mean 11, and yeah, 11 a.m. But I'm not sure that's gonna really move the market because of the bigger news that we have. Okay, so let's go into the big news that caused. Real quick, let me go into the day. Let's go into the bigger news that caused this dump to the 200 moving day average. The 200 moving day average. I'm emphasizing that because I've been reiterating it to you guys. Do not chase this trend. It's okay. I know we will have a little FOMO, but do not chase this trend, because we will get a pullback. Remember, I was telling you guys, we will have a pullback to this 200 moving day average, and potentially, I'm not sure if we will get this lower. I mean, this low, but potentially get a higher low down and fill this gap down here. I'm not sure if we will get this low, but we are at a critical area of support, and that's why we are seeing a little bit of a hold up, a little bit of a bounce. And this is where I am dollar cost averaging. I'm adding to my positions, adding to my positions, adding to my positions. And I want to see later on in the day. So I'm not adding too much right now, but I'm adding a little bit. Well, I added a little bit earlier. Not right now because it's pumping a little bit, but I added a little bit earlier whenever it was beat down, like at the start. And then later on in the day, I want to see a little bit more of a dump, and then potentially see what else is playing out. But I'm just gonna, if it keeps falling, I'm just gonna keep dollar cost averaging, because as we know, we already had this huge run up from these lows. I don't think we're gonna create another low. I think that is. I mean, I'm not gonna say it's out of the picture, but I'm not sure we're gonna create a lower low. I don't think we will. I think honestly we will create a higher low, potentially filling this gap, but I'm not sure we'll get that low. But we are at this 200 moving day average that I was telling you guys is very critical, where I will be dollar cost averaging heavier into. So I want to see later on today if we have more of a dump, and that's when I will start buying more dollar cost averaging more into these positions, to these good stocks like Palantir, SoFi, Meta, Tesla, Nvidia, and you as well, adding into your favorite stocks. But those are some of my favorite stocks. So those are things that I'm very really looking into right now, okay? So I'm going to tell you guys what happened and why we got this dump from 581 all the way down to 574 down to this 200 moving day average, okay? So, coming into the day today, Trump actually updated. Actually, I think it was last night because it says updated 11:46 a.m. So it was last night. I was long asleep at 11:46. Ain't gonna lie, I'm a little bit of early bird, but what happened? So Trump turns his back to his trade war, threatening Europe and Apple. What did he say? President Trump threatened to revive his global trade wars Friday morning. Oh, so it was actually this morning. Sorry about that. Adding a fresh dose of chaos to trade relationships that have calmed somewhat in recent weeks. Just stay with me. I'm getting to it. Mr. Trump returned to tariffs, saying he would apply a steep tax to European exports starting in just over a week, so June 1st. Saying just over a week, and warning Apple that its iPhones, which are manufactured outside of the United States, would face a 25% tariff. I'm getting more into it. President Trump wrote on Truth Social Friday morning that discussions with the European Union are going nowhere, and that he is recommending a 50% tariff on European imports as of June 1st. So it's not official, but he is recommending a 50% tariff on European imports, and Europe actually said they will be retaliating back. Because, okay, so Trump is saying that their talks are going nowhere, and Trump is recommending a 50% tariff on them because the talks are going nowhere, and they said they will be retaliating back. So, I mean, and remember, China is still not worked out, so the tariffs are still not worked out. So if everything crumbles and we end up in the situation we were in about a month ago, where, remember, we're under a 90-day pause with China. But if we start having these trade tariffs wars with Europe, and we add the 50% tariff, and that's going to dump the market. And then if we don't get that trade deal worked out with China, it will create a lower low. So that's where we could see a lower low. If China's deal doesn't get worked out, and the European, and we're just having trade wars with everybody, that's when we will have another lower low. But as of right now, I believe we could see more of a drop, but I do feel like this is just another buying opportunity. Remember, if you missed this run up, remember, I mean, I'm not saying get in at the very bottom, but say from this higher low, say if you didn't get this 17% return and you were FOMOing out, and you were getting FOMO and you were buying during this green, don't be scared when it starts dropping red and to be dollar cost average. I'm not saying just throw your whole paycheck into whenever it's getting red, but dollar cost average, add whatever you can. Add a little bit there, add a little bit here, add a little bit there as it keeps dropping. You know what I'm saying? So if you didn't get this whole run up, like I didn't get the whole run up, but I got a lot of it. I got a lot of the run up. Believe me, I got a lot of the run up. I remember I told you guys I took profits and I was waiting for the pullback so I can deploy my profits and more capital in at these entry points. So right now I'm waiting a little bit because I believe we can get a little bit of a further drop under this 200 moving day average. So I'm not deploying too much capital, but I am deploying a little bit capital. I am dollar cost averaging into some positions right now, okay? And so that is what got us this huge drop, okay? And so we come to the 5-minute. We dropped, and this is where I tell you guys, this 200 moving day average is low. What did we do? We dropped exactly to this 200 moving day average, and now we're getting a bounce. Why? Because this 200 moving day average is very critical. That is a critical thing to fall underneath. To fall underneath or fall to. And so that will hold up as long as it can. And if the market decides to dump, when we break under it, that is very critical. Breaking under the 200 moving day average is very critical, okay? As we can see, if we go to the daily, look, we get bounces on the 200 moving day average. It's very hard to drop under the 200 moving day average. The only time you drop under the 200 moving day average is during bear markets and crashes, right? So 2020 crash during COVID, we had to crash under the 200 moving day average. And then after that, we got quickly bought up through it, right? During our bear market of 2022, we dropped under the 200 moving day average and used it as resistance, right? Look, whenever we had that 2023 little sell-off, we bounced on it, right? But since we had this crash of tariffs, we dropped under it, and now we're having threats. We're having threats, but we're better than where we were a couple months ago, right? And so right now we bounced on it. We could dip a little bit under it and get shot back up, but right now we're just holding up on it, okay? But I want to see us dip a little bit under it. That's what I can see happening. But I just want to show you the proof, right? So as you can see, we bounce around it. We can dip a little bit under it, but we will bounce back over it, right? And this is where, look, you see, bouncing on it, bouncing on it, bouncing on it. We dipped under it, used it as resistance. So this 2015 was a little bear market, as we can see. We used it as resistance, but then when we got out the bear market, we bounced on it, bounced on it, bounced on it. 2018, we actually dipped under it. That was probably a little crash, a correction. Sometimes there's a difference between a correction and a crash, right? So this right here, 20%, that is, I believe that is considered a crash, honestly. It's 2020. We know 2020 was a crash. 35% of the market. That is pretty insane. Then from here to the down, we got. So keep in mind that 35% crash in COVID is huge. I just said it was huge. And you could tell how huge it was by the crash we had this time because the tariffs was only 21%. Right? And we felt like the world was on fire when we were dropping like this. So imagine if we would have got all the way down to 35%. I mean, that would have been crazy, right? So I'm just showing you how, there's different levels to these crashes. But yes, so we're at this 200 moving day average where we should be dollar cost averaging because really they're giving us more opportunities to buy, another opportunity to buy, right? I'm not going all in again because, we still have stuff to be worked out. Trump said he's recommending 50% tariff as of June 1st. I mean, they're not in yet, but he's recommending it. So that has spooked the market, dropped it down to this 200 moving day average. But I'm buying right now. I'm dollar cost averaging right now, but I'm looking further to get a further drop so I can keep dollar cost averaging and getting better prices on my favorite stocks, okay? And so I haven't had a trade today, but the market is real choppy today, so I'm not forcing nothing. I'm not buying no calls. Obviously, we're trending up, so you don't want to buy no puts while we're trending up, right? But I am looking because it could be a little bit of just a chop, and then around 1, 2, we could end up dumping. So I'm looking for that around these little later times for these dumps, okay? So I'm just keeping my eyes on the market, keeping my eye on the news and what's coming out because I'm ready for this. I love this. I love these buying opportunities. That's all they're giving us is another opportunity to buy. If we were having greed, if we were feeling greedy and buying whenever it was just going up, and we felt like we're missing out, why, whenever we're getting these pullbacks, why wouldn't we start buying now? You see what I'm saying? And so another reason why I feel like we could get a little bit of a drop under this 200 moving day average, because look at where we are at, okay? We are still at 64 on the greed, right? So we know the market likes to dump greed and likes to buy fear up. So I feel like we will get back to a little bit of this fear area, and that's when I will really be loading up. When we get to that fear, that's when I will really be loading up. So right now I'm dollar cost averaging because I don't want to miss it if it does pump up, right? Because I don't know exactly what it's going to do. If the market wants to take off, I dollar cost average it. I dollar cost averaged at this 200 moving day average. So if it takes off, I'm like, I didn't buy as much as I wanted to, but I am in the market. You see what I'm saying? But when it gets to this fear, if it gets back to this fear, that's when I'm really loading up. I'm throwing heavy dollar cost averaging. That's when I'm dollar cost averaging heavier in, okay? Because in fear, that's when you should be buying. In greed, that's when you should be cautious of profit taking. And remember, I profit took on my Meta, my Tesla, Nvidia I'm holding. Because I feel like all these stocks have high potential. But Nvidia, I feel like I got so cheap that I'm just holding and I'm just going to keep adding in my profits, right? But on Meta and Tesla, remember I took some profits and I'm looking to redeploy at certain levels. So on Meta, I want to get it down to around the 600 mark. Why? Because that is close to my 200 moving day average as well. That is close to my 200 moving day average as well, like a little resistance right here. as well as like a little resistance. You know what I'm saying? So it's close to the 200 moving day average, just a little resistance. So I want to get it near this area. I bought a little bit today, but I want to get it a little lower. My Tesla, that is an area of resistance as well. That was a heavy area of resistance as well, right? So as you can see, sorry, I don't have the premium edition, so I can't go all the way back to the 5 minute. If I just go to my daily real quick, as you can see, look, resistance, right? Heavy resistance, and then 200 moving the average is right around here. So I want to see a little bit of pullback to around this 300 area, and that's when I'm loading up heavier too as well, okay? And so today, this is good, right? We're getting our pullbacks. So again, if you were feeling greedy and you feel like you were missing out, not greedy, if you were feeling FOMO and you were thinking you missed out on the pump and oh man, I didn't get in when it was red, I told you guys, be patient. We will have a pullback. We will have a pullback to this 200 moving day average. We could potentially go lower, but at this 200 moving day average, this is when you want to be dollar cost averaging in. We could potentially move lower, but dollar cost average in so you don't miss it, right? Because if it does pump up, I didn't miss it, right? And if everything gets worked out, I didn't miss it, right? But I didn't deploy as much as I want, but I didn't miss it again. And so I'm dollar cost averaging again. I'm dollar cost averaging in right now. And I'm looking for potential further drops so I can get better prices, okay? And so that is pretty much it. I kind of reiterated myself 5 million times. I'm not gonna lie, I noticed that, but you know, I'm just reiterating it to you guys, to myself, and just want to make sure my point is across clear, okay? And just tell you guys what I'm doing. Nothing I'm saying is a suggestion for you to do, but I'm just telling you guys what I'm doing with my money, okay? And what I'm doing, these are what these big time players, these big time money makers do. I don't just come up with everything on my own. I listen to a lot of other people that are way more successful than me, that have way more money than me, that have been in the market way longer than me, and I get my ideas off of them. And I also look at the market and through my experience, and I come up with my experience, my analysis. I combine their knowledge, their analysis. I put it together, and I come up with good analysis. I feel like good analysis and good projections to give you guys. And I've been calling a lot of this stuff. I'm not gonna say I'm calling everything, but I've been calling some good things, right? I told you guys it was gonna fall to the 200 moving day average. I told you guys for sure it was gonna do that. In one of my videos, I said for sure it is gonna fall to this 200 moving day average. What do? We fell to the 200 moving day average. Now I'm saying potentially we can move lower to create a higher low at that gap. I'm not saying we will. I'm not for sure about that, but I told you guys for sure we were going to fall this one. I'm not for sure we will fall into that gap, but we could potentially get a higher low to that gap, okay? And so that's why, again, I'm dollar cost averaging right now, and whenever we fall beneath that 200 moving day average, that's when you really want to be loading up, because as you know, it doesn't stay under the 200 moving day average for long, okay? We're not in a bear market. We will be going much higher in Trump's term. I do believe that we will be going much higher in the market. But right now it's just loading up accumulation opportunities, okay? So don't miss these opportunities, guys, okay? Because these are honestly like generational opportunities. Like, not right now is not really a generational. I wouldn't say right now at the 200 moving day average is a generational. But at times like these, when it dropped all the way down to 482 on the SPY, those were generational opportunities to buy, okay? So if you missed out on those, because I didn't get it at the very bottom. You know, I got it around here. I got it at good prices. I didn't get it at the very bottom. But right now it's giving us other opportunities to buy, okay? And so I didn't trade today. I'm still looking at the market, okay? I'm still just holding off. You know, I might have a trade today. I might not, depending on what the market does. I don't really want to go in for a call. Why? I don't really believe we will have a real pump today. We're getting a little bit of a bounce, right? It was at 575, so we got a $4 bounce. We're getting a little bit of relief, but I'm not sure that investors are going to want to put their money into the market. Like, big investors are going to want to put their money into the market over this 3-day weekend, okay? Remember, we have a 3-day weekend. Monday, we will be off. The markets will be closed because of Memorial Day. So I'm not sure with all these tariff talks that Trump just came out with, that investors are going to be ready to put their money into the market to, you know, because they never know what Trump's going to say, right? And so I'm very cautious. If I see us start to dump, I will be buying puts and I will trade. But I'm just being very cautious. You know, I'm not going to rush nothing, seeing what the market's going to do. and we will see what happens. Okay, that is pretty much it. Sunday, actually, we have Jerome Powell speaking on Sunday, 1:40 p.m. So we will see what he says about interest rates or whatever. We'll see what he says. So right now could be a very good time to be dollar cost averaging, because what if he comes out and says cut rates? So that's what we're saying. We're dollar cost averaging because we don't want to miss nothing, but we're not just throwing everything in because we're not out of the woods completely. Okay, we're not completely out of the woods with tariffs. Okay, I'm just trying to get it completely across. If you say, I'm repeating myself, I just want to get everything completely across. Okay, and so Fed Chair Powell speech he can come out and say he's cutting interest rates and this market will start to pump, right? This market will start to pump if he says that, but there will be a limit because we are still not out of the woods with these tariffs. Trump just came out with more tariff threats, so we're not out of the woods yet. Okay, so we still got to be careful. We still got a dollar cost average, not completely throw our whole kitchen sink into it, right? And so let's be careful, but let's capitalize off these opportunities. Okay, I don't want to keep this too long. I just wanted to show you some good value information on why this market is dumping, and just give you guys information that I've seen happening in the market, and I just want to share with you guys. Okay, remember, I love every single one of y'all who are with me on the journey. Every single one of y'all mean a lot to me. Okay, and remember, guys, stay persistent, passionate, and make sure y'all get paid. All right, peace.